All right. So today, what we're talking about is how to gain profit dollars in your business, right? Everybody wants to make more money, but the business as a machine, sometimes it's hard to know what levers to pull to really gain, profit dollars on your income statement and cash in your bank account. Um, we look at businesses. Uh, Essentially, you're using what assets you have to create value and income month over month. And so learning how to leverage different strategies to make sure that you can maximize the utilization of those assets, maximize the profitability per hour, et cetera, is what we're looking at. And then speaking of hour, the other thing that we want to really keep in mind is uh, a business owner's time, right? So this is something that often gets ignored, um, even by the business owner themselves, right? It's you start your own business, and pretty soon that you realize that you are your own boss, but you've suddenly started working a whole lot more for less money. So, we want to kind of help owners have their cake and eat it too, have that freedom uh, and independence, and be able to innovate and add to their local community economy, but without the stress and the burden of uh, being the sole person responsible for anything and everything in the business. Or even if you have employees, it's very easy to get um, still caught up in the whirlwind. So with that said, I appreciate everybody attending today and taking time out of your day to spend time with us here. And because we do believe time is your most valuable asset, we're looking to give you a framework that will help you quickly identify strategies that you can go after that will add profit dollars to your bottom line. And it's a leveraged technique, which you'll see in a little bit. But one thing to talk about here is investing your time being a key to business success. So we want people to work uh, on the improvement of their business, ideally on the improvement of their business, more than the day-to-day operations. So here's a couple examples of sort of what we're talking about. The very first one is the way that Action Coach defines what a successful business is. It's a little bit of a unique definition, something that you may not have seen or thought of in this way. Um, but basically, what we say is it's a commercial, profitable enterprise, profitable being red, because that's pretty key to running a business, that works without you. And what we mean by that is um, what's most critical for anybody running a small business is you do want monthly profit, you want annual profit, you want an income for your family that can achieve your personal goals, your personal dreams, everything else. The other thing is that someday you're not going to want to operate that business anymore. You're going to want to retire. You're going to want to pass it down to somebody. You're going to want to sell it. And that sale period is a period where most business owners don't realize um, anything sometimes, and sometimes it's much less than it should be for the work that they put in um, the entire time they're operating the business. So what we want to do is have you working on your business, not in your business. And at the same time, what that does is it removes the concentration risks that a lot of small businesses have when it comes time to sell. So if your if your customers are dependent on the business owner, if your suppliers are dependent on the business owner, those relationships are more personal. It makes it very difficult to have a succession plan. So that's something that we keep in mind. We really look at the long term and encourage people to look out. What is the end goal in mind? So some questions to think about as you start looking at that longer term period. 5 years is really somewhat short if you're a young company, but you want to start considering where's your business at now in sales, and then look in 5 years, set a goal. That's pretty common to say, okay, I want my business to be $2 million in sales in 5 years, $10 million in sales in 5 years, 200,000 in sales in 5 years, whatever it is. But there's other things to think about. So where do you live? Do you live in the same house that you live in now? Do you need to achieve a certain level in your business so that you can move to a different town, a different home, or something that you desire to do for you and your family? Vehicles, same thing. And investments. So when you're able to make investments, you start to really lean more towards the true entrepreneur definition, in that you're making passive income, and able to diversify your income stream as well. Travel, that's a goal for a lot of people. They want to go visit certain places in the world, certain places in the country, whatever that may be. Those things cost money. They're experiences. They're great experiences to have, and so we want to make sure that people take that into consideration, because a business should exist to benefit the business owner, right? You're serving your customer base, which is extremely important. But as far as the business strategy and ramping the business up, it needs to be designed to be what you really want. Where do I need to operate to achieve my goals and dreams? And then the last one is a super critical one, and we talked about that a little bit earlier, is how much time are you working in the business? So, you can look at your profit dollars month over month and say, all right, I made $10,000 this month. And then, pre-tax, after all expenses. But maybe you're working 180, 190 hours a month, 200 hours a month. So something to keep in mind is, how do you get a greater return on the value of your time? What is the value of your time to you? Are you worth, $25, $50, $100, $500? And as we look at strategies to increase profitability, we're also looking at ways to leverage people, equipment, property, systems, this sort of thing, to give you a higher return on your time. So you earn more and work less, right? So keys to business success, is like I was saying, leverage is number one. When you want to scale a business, you have to be able to leverage your assets, your all the different variables within your business, your people, systems, marketing, etc., so that, because a scalable business is really becomes scalable when you can acquire the next customer for less than you acquired the previous. And you do that through leverage strategies in your sales and marketing. Leverage means doing more with less. That's the kind of the gist of it. People are key. People are critical driver of business success, right? Especially if you're in a customer facing environment. Not only do they have to do their jobs well, but they have to be able to embody the company culture that you've set up towards your client base and your prospective clients. And these days, customer satisfaction really isn't even the goal. It's about a customer experience. It's about how likely are they to refer your business to one of their friends, right? The Net Promoter Score that many businesses use for quality of service is just that, right? How likely are you? Just one question. You've probably seen it if you've gotten surveys or anything from any businesses that you deal with. And so using that metric, people within your organization have to be set up for success, and they have to be able to communicate your vision, your purpose for the business and what you want to do for your customers. So it's there's an alignment that has to take place in values, in that sort of thing. Systems is something that once you get some predictable cash flow, then you can start investing in systems. And the idea behind systems is consistency, right? So Um, Similar to a manufacturing facility, if you have a process that was manual, you're relying on, maybe there's 3 shifts, right? And there's 3 different people that do this job every day. So you lose consistency there already. And then you're still relying on the human element to not create a defective product out of that operation, not lose productivity, throughput, these kinds of things. It's the same principle across the board. So you don't have to be a manufacturer to want to utilize systems, but the whole point is consistency and predictability. And that's how you ultimately get the quality of service that you need for your clients to help your business grow. Technology is similar to systems in that you invest in maybe a CRM or an industry specific piece of software designed to be an end-to-end solution where you can start at your potential customers and all the way through to order fulfillment, service, these sorts of things. And really those 2 things give you better optics and they help you make better decisions. They give you enough transparency to find the opportunities to improve different segments of the business, which are usually hidden without. Sales and marketing, again, I talked about that. Leverage marketing is strategy number 1 for scaling a business. So by that, I mean using resources that you may have that, not just an internal marketing person, but social media is something that people use for leverage marketing all the time. They'll produce one piece of content, put it out on 3 different platforms, and then start their marketing funnel or their sales funnel that way, so that when somebody engages with that, then maybe they go to their website, and then maybe they have an offer for people who engage in their website, which gets them communicating with your business and so forth. So there's a customer journey laid out. And once you have that systemized, then you can start to count on what your pipeline is. You know that we're going to get, if we reach X amount of people, we're going to get X amount of engagement, that kind of thing. Some people think sales and marketing is an expense, and it is if it's not effective. So it's very important to test and measure every marketing strategy that you have. You want to know where your leads come from. A lot of times, you may have a billboard, a digital ad, a social media, radio, maybe, direct mail, telemarketing, who knows, right? There's a million different marketing techniques out there. And if you don't know which ones are working, you can't really tell what's my customer acquisition cost. What does it really cost me to get a customer with this marketing strategy? And so a way to measure this, and we do this with our clients, is we lay out a 6-week time frame that we audit this, and we say, okay, we need to know when our leads coming in, where do they come from, and how much did it cost us to get those leads? So you may say it may be just a simple checklist with somebody at the front desk in your business, or then they may, hi, how did you hear about us? This sort of thing. But you collect all that data, and then you can figure out where's your effective marketing at. You find the effective channels and you cut the ineffective channels and take those marketing dollars and invest them in the more effective marketing. And that way you figure out what are your customers really, where do they go? Where do they want to find out about your specific type of business, and what do they like to see? So you can also play with marketing campaigns and things like that at that point. So for every dollar out, more dollars should come in. That's essentially what I'm saying. So test and measure. All right, acquisition costs, like I was talking about. So say you have a digital ad that you pay for a newspaper app, right? And you spend $300 in advertising, and you got 10 customers. It costs you $30 each to get the customer. From a leverage standpoint, we want to know how can we achieve more customers with that same marketing spend, which would in turn lower your acquisition cost per customer. So the other thing to think about when you're looking at marketing and sales is lifetime value of a customer. So not necessarily that the customer comes in and buys from you one time, but how many times on average does this specific customer come back? And also from a referral standpoint and a word of mouth standpoint, how often does this customer bring other business to you? Are they recommending your business to 10 of their neighbors, and then you're actually gaining 11 customers out of your one customer acquisition? That is leverage and scalability. And so measuring that per customer is critical. How long do they stay with you? How long do they maintain a relationship with you? And then how often do they come in and buy from you, and how much did they spend? And then again, measuring what are they actually doing for your business as far as helping bring other people in, and how do you help them become more effective at that? If you can train your customers to advertise for you, that is the ultimate leverage move. So first poll question, and please use the poll section to answer either yes or no to this question. Is, do you know your conversion rate? And I'll give you a little bit of information here. Is, do you know what your conversion rate from leads to customers are? So how many people are engaging with your business in some way? And then of that, what is the percentage that actually become customers? And I'll give you guys a few seconds. We got roughly 50% participation here. So we'll wait just a little bit more, try to get closer to 80, and then we'll discuss that a little bit. Also, while we're kind of lagged here, if you do have questions, to Michelle's point at the beginning, please put those in the Q&A, and we'll get to those at the end. All right. So percentage of folks that do know their conversion rate is 31%. And those that do not is 69%. So that's pretty consistent with what we see with most small businesses, is they do not know this information. So if you don't, please don't feel like you should have. It's very common to not know the information, but it's very powerful once you learn how to measure this effectively. So as we talk about that, this is the framework that Action Coach uses all over the world. We're in 81 countries now, I think it is. And it's been used for almost 3 decades at this point. It is probably the best tool I've ever seen as far as strategies to increase profitability within a company. And the reason that it's 5 ways is because if you look at this, you'll see that in red, these are the things that business owners typically know. They may not know their number of customers, that happens, but typically you know what your sales are for sure. And then profit, hopefully if you have some type of financial statements, you have an idea of what your profit dollars are. Now, not everybody does. Those who are maybe still running the bank account financial statements may not have a real good idea of that. But so those are the 3 things that you're more likely to know within your business, and you want all of those things to go up, right? But they're outputs, they're results of the key activities that you're taking within your business. So these other things in blue are 5 drivers of those results. And so what you look at is if you can affect all of them, you have a compounding effect, which you'll see a little bit later. And I think it's 2 slides in. But the other thing is you've got to break out where you can apply individual strategies to these different areas and say, how do I improve my number of leads? That's if you ask historically, if you ask business owners when they come in, what is your greatest opportunity? They're going to say, I need more leads. And often that's actually maybe not what they really need. They may have plenty of leads, but they either don't have qualified leads, or some type of deselection process, or B, they have plenty of leads, but they're not turning into customers. And so the conversion rate is actually what you want to work on. But as you know, the poll is a good representation of that. The majority of people don't know their conversion rate or don't have a method of calculating. So these other ones are, the number of transactions, that's an average number. So you want to know the average number of times that a customer buys from you in a year. And then an average dollar sale, meaning what is the average purchase price that someone, when they complete a transaction, what is the average dollar amount for all customers, right? And then profit margins is obviously a key area and a huge way to gain profit through productivity or efficiency gains, cost cutting, these kinds of things. So what we'll often do on profit margins is we'll depending on the business type, but for anybody who carries any type of inventory or has any true direct costs to what they provide, that'll get broken down further into gross profit, gross margin, and net. So that way you can look at what are my fixed costs, what can I maybe do there to improve my margins, and then also how do I reduce my cost of goods sold per product. So second poll question, do you believe it is possible for you to improve your business by at least 10%? And again, we'll give you a little bit here to make sure we get proper participation. Okay. So we had 100% of attendees saying that yes, they thought they could improve their business by at least 10%, which is excellent because that means everybody knows that there's some runway, right? That they can progress, they can gain momentum and improve their current situation. That's really good thing. Obviously, if you're watching these webinars, you're interested in the growth of your business, and that's step one, is being somewhat dissatisfied with your certain situation, your current situation, and saying, hey, I want this to be better for me. And once you do that, it's possible to change your outcome, but you have to be dissatisfied with your current state first. So because everybody said yes, we're going to use this framework now with an example of a 10% strategy. Most often it's significantly more than that in certain areas or all areas. 10% is the easiest example for understanding the compound effect and to kind of see the math, nice even number. So the way this works is you have your number of leads first. So this is how many prospects do we have out there? It may be a database that you have. It may be a CRM. It may be a little bit more manual than that, and saying I've got X amount of people that are coming in my store every day, and then of that, how many people are actually buying. But some way to measure what are your prospective customers? What is that real quantity? Next is your conversion rate. So basically this is saying we have 4,000 leads, say in a year's time. And of that, we expect that 1 in 4 are going to buy from us. So that equates to 1,000 customers. The average number of transactions, again, would be per customer. On average, how many times do they buy within a 12-month period? Is twice. Average dollar sale, meaning on average, how much do all of your customers combined, what is the average spend for when they do business with you? Here it's $100, right? So when you take customers times average transactions times average dollar sale, you're able to get your revenue. And a lot of times we'll actually start with the revenue piece with a client and back into these other numbers because that's often easier for them. But so now your revenue is $200,000 based on 1,000 customers buying twice a year at $100 per purchase. Your profit margins are 25%. So in this case, it would be net margin because we don't have a breakout here. So that means that for every $4 in sales, you're keeping $1. So your profit's $50,000. Okay, so the 10% increase, this is where you can get to see the compounding effect of the way that we look at this and the way that we help create sales strategies and profitability strategies for clients. So a 10% increase, you would look at improving each one of these blue sections 10%. So you're going to have specific actions within these to bump them 10%. So let's say that we implemented those, and let's say that we're successful on all of them, which we certainly should be. So now your number of leads has jumped 10% at 4,400. Your conversion rate jumps 10% to 27.5%. That gives you 1,210 customers. Average number of transactions jumps 10%. You're at 2.2 now. Your average dollar sale jumps 10%. This could be, bulk pricing. This could be straight price increases, et cetera, et cetera. Now your revenue is $292,820. You're going to bump your profit margins 10% as well. And so now your bottom line profit is $80,525.50. So without getting way into the math here, you can look at what most people would think is if you improve 5 areas 50%, your overall profit gain is going to be 50%. But because this is kind of a cascading strategy, and I'll give you the answer for what is the actual profit dollar gain on this. So your revenue is up 46%, right? So you affected 4 variables at 10%, and you gained the extra 6 because of the compounding strategy. And your profit dollars increases 61%. So rather than a 50% increase, you gain an extra 11% through the compound effect and the cascading strategy. This is a tremendous tool for any small business owner. Like I said, we use it all over the world. It works anywhere on anything, and it's somewhat a simple thing to implement and to track over time. So dreams can and do come true. You have to start thinking like an entrepreneur, which means how do you define yourself? Am I an so for example, there's someone here in our area that we've talked to before, and they're a chiropractor. And if you ask them about, what do you do, right? They'll give you the answer, I'm a chiropractor. Not that I own a practice, Not that I have employees, not that I am the actual business owner, but I am a chiropractor. So that's a very common thing for business owners to do, is define themselves by the trade of what they're actually what their business actually is, because often you learn the skill set, you get the education, and then you create the business. The reality is, if you shift your mindset to saying, wait a minute, I'm a business owner, and even further, maybe I'm an entrepreneur, and it's, I would like to operate multiple businesses. I would like to, create investment income and diversify my personal holdings, these kinds of things. But that all takes place with that shift initially to say, I'm not really self-employed. I'm a business owner. And when you start thinking that way, your motivation changes a little bit. The way that you make decisions changes a little bit, and you start to gain some additional momentum that you probably didn't even realize that you had, just because you kind of redefined who you are. So with that, you've got to change the way you do things. That starts to happen somewhat organically. And the last sentence is pretty common way to look at things, but if you keep getting, you'll keep getting what you always got if you do not shift, right? So we see this a lot with companies that may come in and they say, well, I've been in this business 25 years. What exactly can I do different? I mean, I know the business, right? I know the market. I know everything there is to know about whatever business it is. So, basically you can't teach me anything. We're not going to get any better. These ingrained kind of beliefs about where they're at. And that's one of the discussions that we typically have with those individuals is, well, if you one thing we do know is, if you keep doing exactly what you're doing now, then this is the profitability of what your business is going to be. This is the size, everything else. If you're open to doing things differently, then there's great potential for, growth and upside there. Most people are open to that. They are, but they may not realize that they're hampering their own progress. So hold on to your dreams. They're real. That should be the driving force for your business, is what do I want this business to do for me? Not what am I doing for my business? So, okay. Third poll question. What would you do with extra time away from your business? A few more seconds here. All right, cool. So of the four areas, we had a pretty good mix here, which is awesome. The leader was time with family. Coming in second at 30% was pursue other business ventures and investments. And then with 10% each, hobbies and professional development. So family is a very, very good thing to think about when you think about where you want to free yourself up in your business, right? So if, and all of these things are, but when it comes time to accountability for what the business is doing, an interesting action to take, especially if time with family is your motivator, is you start to think about, well, if I don't make my business do X you know, growth or profitability, or I'm unable to hire a team to do the things that I need to do or retain them. You know, all the common business challenges, right? How much time am I losing with my family? You know, am I not able to go to baseball games because I have to work all the time? What is the value of going to those baseball games? You know, so there's a lot more to what's valuable in someone's life than income, right? And that's just something that we feel very strongly about. As you look at your overall business goals, what are the things that you value? And they may be tangible, they may not be, but how do you want to spend your days, and what do we need to do to make sure that the business can become sustainable? You know, without your day-to-day involvement, you're absolutely more than welcome to stay involved day to day if you want, but at least you have a choice, right? If you get sick, your business doesn't falter. These kinds of things. So I really like the mix of answers here. It's the same with, you know, another talking point on pursuing other business ventures and investments. So what's the opportunity cost of having to work in this business so much? You know, how much loss of potential profitability do you have from not being able to invest in other business ventures or traditional investments? Because once you climb that entrepreneurial ladder and you're able to do that, then your time, your return per hour on time you spend in business grows exponentially, right? Because you're maybe 1 hour a day you're with this business, 1 hour a day you're with that business, but you have all this time that the businesses are operating or the investments are operating without your direct involvement, and you can greatly increase your return on time spent within the business. So good answers. Thank you all for your participation. All right, so last slide here, and then we'll look at questions. This is the Jim Rohn. It's a quote by Jim Rohn. He was a mentor to the founder of Action Coach, Brad Sugars. It's a great quote, especially with the subject that we're talking about today. Never wish your life were easier. Wish that you were better. Work harder on yourself than you do on your job. And I'd add to that, you know, the people that you surround yourself with, the books you read, the learning you do, those are all the determining factors of where you're going to be in the next few years, right? So if you're able to continue to push yourself, grow yourself, your business or whatever venture you're in is going to follow that. So that's essentially the end of what we have to talk about today. As Michelle mentioned, we had webinars prior to this, and we'll have one more that I'll be joining you with. So
okay, thank you, Robert. That was great. A lot of really great information. We do have a question in the queue, and I think it's a good question. Is there an equivalent conversion rate with the nonprofit sector?
yeah, so without knowing exactly what this particular nonprofit is we're talking about, but you know, your customers in a nonprofit may be donors, right? And so you look out, your leads would be prospective donors, people who may have an interest in supporting your nonprofit, right? And then those who actually donate, that ratio is going to give you your conversion rate. And then what you can do is work on scripting, work on approaches to those prospective donors to improve it over time. But yeah, it's absolutely trackable. Same concept, just a little bit different way of using it.
And that makes me think of another question. In nonprofits, you might even have more than one. You might want to use one of those calculation sheets for the different types of donors, because You might have individual donors, which may require one calculation, versus your corporate donors, which may be a different calculation, which will require different scripting and, you know, all of that, different lead sources and that type of thing. So you might have to have two different, and would a business maybe have to, would a business maybe do the same thing, have several of those sheets if they had different types of customers, individual versus, you know, corporate, for example?
Yes, that's, you know, as you mature a little bit past the initial stage of using this, then you segment. If you have different facets within your business, so say like I have a HVAC contractor that's a client. Well, we track these things for his service piece of his business, his install piece of his business, and then his maintenance piece of his business. Because if you aggregate it all, you do not see what you actually need to see to improve the overall business. Same thing with a nonprofit, to your point. You would probably track donor types separately. And then you can see your conversion. You'll figure out where are we really not nailing it, right? Maybe it turns out you're doing really good with individual donors, and it's the corporate ones that we need to work on. How do we get better at that? So yeah, it's all about the level of detail that you can see, and creating segments is the way to do it.
Great. And on that note, everybody loved that calculation that you came up with. Can we have a copy of that handout?
Yes.
Perfect. Thank you.
That's something. Well, I'll send you the slides, I should say. Okay. But that is a Action Coach IP. But you know, it's something that we do with a workshop type setup anyway. Mm-hmm. And it's what we use within our strategy sessions with individual businesses to kind of figure out a current state, future state, right? So yeah.
Okay. And I can't wait till you guys can actually, we're building a classroom right now, which we can't have anybody come into, but, sure. But I can't wait till you guys come in and are able to actually teach it face-to-face in a classroom, because I think a lot of businesses will also benefit from actually going through that together. So
absolutely. That is ideal, to walk through the whole thing. Mm-hmm. So we'd be happy to do that. Awesome.
Thank you. Let's see, I'm going to take a look at the chat box again real quick. Okay, yeah, it looks like everybody just really loved the information, wants copies of those slides. Now you're also going to talk to us tomorrow. You're going to talk to us about sales. Yes. Can you tell us a little bit about what you'll be teaching us tomorrow?
Yeah, 10,000 foot view. What we're looking at is more on the optimization type of thing. It's going to tie right into this from a sales and marketing standpoint. It's those actions that you're taking to drive more leads, to improve your conversion rate, these kinds of things. So these are the metrics, those top couple of categories of the metrics for your sales force, right? And tomorrow we'll be talking about what are the different strategies within that, and also what are the activity indicators that you may want to watch for your sales team to say, how do I know that they're going to generate this many leads, or how do I know that they're converting? More importantly, the conversion rate is key. So if you're throwing spaghetti at the wall, that's one thing. But if you get your sales force and a sales strategy, basically in a workflow, a pipeline, then your conversion rate, you start to get optics around that. So that's in gist of it. That's what we'll be covering tomorrow.
Okay, that is awesome. Thank you so much. Thank you again, everybody, for joining us. We will see you tomorrow, same time, same place. As a reminder, all of these workshops do tie together. So you guys have the link to the playlist of all of the webinars that we've had so far this week. So please, if you've missed one, please watch it. Again, we'll see you tomorrow here and at the same time. Thanks, everybody.
Excellent. Thank you all.
Bye-bye.